So you're looking to move from places like New York, Connecticut, Massachusetts, Pennsylvania, really anywhere in the Northeast, or you're looking to come south from places like Ohio or other states in the Midwest to Bluffton or Hilton Head, South Carolina. Well, there's one thing I can guarantee you, your mortgage payment is going to look slightly different. And sometimes those are good surprises, and sometimes they're not. People typically fall in love with the beaches, the warm weather, the golf, the fishing, all the things surrounding water and everything that Bluffton or Hilton Head can bring to you. But what you fail to recognize is that your mortgage payment is going to look different because homeowners insurance is going to change. Taxes based on whether it's your primary or non-primary residence is going to be different. There's HOAs, there's potential condo fees. Well, today we're going to unpack exactly those differences so that these surprises are not going to catch you off guard. My name's Aaron Benton. I'm a local mortgage lender and host of this channel. I get texts, emails, calls every day from people just like you looking for home financing advice. So stick around because we're about to unpack some of those surprises that catch others off guard. A lot of people that I talk to are roughly in a very similar situation. They're able to work remotely, maybe they're looking to relocate, maybe they want to have a second home or an investment property, or they're just tired of the winters, the snow and the cold, and they want to move here to the south with the warm weather and the beaches. I'm originally from Rochester, New York, one of the cloudiest cities in America. I moved here 14 years ago. I've never looked back. So very, very exciting move for me personally. Maybe your journey is quite similar. But there's one thing that I do talk to people about, and it's what you truly care about is the monthly mortgage payment. Now, the first part that catches individuals off guard here is our tax structure in South Carolina. So if you were to buy we'll say a $600,000 house, the taxes for a primary residence is about $2,400 a year. Again, that's probably a laughable number if you're coming here from the Northeast. But if I flip that around and you're looking to purchase a $600,000 property and it's not going to be your primary residence, those taxes are roughly $6,000 a year. Vastly different. So the first piece that I always have to have a conversation about is what is the intention of the property? Is it going to be your primary? Are you moving here? Or is this going to be a non-primary, either it's going to be a second home or it's going to be an investment property? Now let's talk about things that catch buyers by surprise the most. Number one is insurance. Our insurance costs in Bluffton or Hilton Head, especially Hilton Head, are most likely going to be more than what you're accustomed to in the Northeast. Reason being, proximity to water. Hilton Head is a coastal barrier island, and as you can imagine, that touches the Atlantic Ocean, and as you work your way farther into Bluffton, the homeowner's insurance will go down. So it's not unlikely to see flood insurance, which could be a new thing. Now I'm going to give you a tip. If the seller has a flood policy in place and you need flood insurance, it is beneficial to assume the seller's flood policy. You can still shop it around, but most of the time when someone assumes the seller's flood policy, that will be a cheaper or a less expensive policy than what you can get in today's open market. So number one, I'd suggest that you assume the seller's flood policy if one is already in place. Now, you can't assume someone's homeowner's insurance, but that is most likely going to be different simply because of the proximity to water. So as you can tell, we're walking through taxes, insurance are slightly different. Here's another real one. HOA. South Carolina, in Bluffton or Hilton Head, a lot of the neighborhoods here are gated neighborhoods and they carry monthly costs. Now, I don't even have a gate in my neighborhood. We have some lagoons and they maintain the roads, the HOA, and my HOA is still $1,200 a year. So it's just, that is nominal, but it's still an annual cost that some people just get caught off guard with. So understand, HOAs have, not only they have the annual or the monthly fee, but they also have transfer or capital contributions fees. I'm going to read to you some of the examples of the neighborhoods here that I most often get asked about. So the first is Sun City. Sun City, great, absolutely wonderful 55 and up community, tons of activities. My buddy's dad is actually moving into Sun City as we speak, and he's very excited for the woodworking club. I've been trying to convince my father to move here for years. He loves to play softball. Sun City, top-notch softball league. I also play softball, but I'll tell you what, I don't have a fan base nearly what they see in Sun City. Sun City, they have wraparound bleachers, they have sponsorships in the outfield, they have an announcer. If you like softball and you're 55 and up, I'd strongly consider looking at Sun City because there is really, not only is softball great, but there's something to do for everybody. But nevertheless, the HOA fee in Sun City is $28.20 per year or $36.87 per year, depending on which part of the neighborhood you're in. Now, the transfer fee, these are the upfront costs in addition to your standard closing costs. They charge 2/3 of 1% of the purchase price, one-time capital contribution fee of $3,500, and a $300 admin. So that can add up, if you will, on a $500,000 purchase or any kind of purchase in there. Again, these numbers are not here to scare you. They are here so that you understand, hey, when I'm looking to purchase a property, not only are you responsible for the down payment, but you're also responsible for closing costs and these upfront transfer fees or initiation or capital contribution fees. You get your money's worth. I mean, like I said, Sun City has these unbelievable amenities, really for anybody that can fall in love with the neighborhood there just because they have something for everyone. But you have to fund these programs, and this is what these capital contribution and transfer fees have. Other neighborhoods of interest that I most oftenly get is Hampton Hall with an annual fee of $6,372, upfront transfer fee $35,000. Hampton Lake, $5,180 a year in your HOA with a transfer fee of $15,000. Colleton River Club, absolutely gorgeous, very close to Hilton Head. It's on the water. It has a little marina there for their own owners public dock that the owners can use. Transfer fee $165,000. HOA per year $31,542. The golf is breathtaking. 2 beautiful courses. You are absolutely in luxury if you're going to find yourself in Colleton River Club. One of my clients just did what's called I think it's called a stay and play, where they went and stayed in Colleton River for 4 days. They were kind of on the fence before the stay and play, and let me tell you, after that, they are absolutely all in and want to purchase a property in Colleton River Club. Callawassie Island, $75,000 initiation fee, $18,452. I had the privilege of playing at that golf course about a year ago. Absolutely beautiful, wonderful views, pickleball courts and gym right on the water. You would not be depressed or upset should Callawassie find you, or you find Callawassie. Belfair, $100,000 transfer fee up front, $24,749 HOA annually. Berkeley Hall, $125,000 HOA up front, transfer fee $28,104 per year. Now, as I dip away from some of these luxury neighborhoods, Mill Creek at Cypress Ridge, another very popular destination. I write plenty of primary homes in there, but I also see people buying second homes or even investment properties in a place like Mill Creek at Cypress Ridge. Annual HOA $1,586. The townhouses are $3,018. The transfer fee there, $1,550. So I give you this widespread range because it is something where if you're paying $1,550 up front in a transfer fee in Mill Creek at Cypress Ridge or $125,000 in Berkeley Hall, vastly different. So it's very important for you to just ask those questions. What is the transfer fee up front? What is my annual HOA? Because those are going to be added to your total monthly costs, your expenditure. So the taxes can be low if they're your primary. If it's your non-primary, it's going to be more in line potentially with what you're used to in the Northeast. Our insurance is most likely going to be a little bit higher, but there is a catch to that. The homes here in Bluffton and Hilton Head, most likely newer than what you find in the Northeast. I always make this joke. People will talk, why are you able to close so quickly in South Carolina? Why are you closing in 25 to 30 days? Many times in the Northeast, they're telling me that, well, it takes 60, 90 days to close. Well, one of the things is our houses are newer, so the title search from the attorney, much less. If the home has only been built in 2020 and we got to get 6 years worth of title records versus a home that was built in 1885, you can imagine the title search is much more simplified and quicker to receive. So just some little tidbits and nuggets there of how your monthly payment is going to be impacted. Another piece that kind of can trip people up is the occupancy. Now, per mortgage guidelines, a home is meant to be your primary if you have the ability to move in there within 60 days of closing. This is on a conventional loan. Now, I have individuals who just want to get started. Like they say, hey, you know what? I'm buying this as an investment. I just had an example yesterday. I have someone from New York. They're buying a home in the Crescent. And what they are doing is their son is a sophomore in high school. They're buying this as a second home. And then in the future, once their son goes to college, they are eventually going to move here and make this their primary residence. Notice they're not going to be moving here within 60 days. They do have an intention to move here, but I have to write that loan as a second home because they're not going to be moving in within 60 days. What does that mean? It means the down payment is going to be slightly more, and it means that the tax structure is going to be different. They will be taxed at a non-primary rate until they move here. So, couple things. As a primary residence, the lowest down payment you could have is 5%. Unless you're a first-time home buyer, it's 3%. A lot of people like to put 20% down. It avoids mortgage insurance, but I'd be the first to tell you don't need to put 20% down to buy the house. As a non-primary, so a second home or investment, as a second home, the minimum down payment is 10%. Yes, you have to pay mortgage insurance, but again, I can understand that if you're buying a $900,000 house, an extra 10% of $90,000 could be a little bit challenging, and if you have really good credit, the mortgage insurance can be nominal. As an investment property, the minimum down payment is 15%. I will tell you 20% yet again gets you out of mortgage insurance. In today's marketplace, 25% down gets you best terms. You will notice Fannie Mae and Freddie Mac, they did like an update to their guidelines a couple years ago where the interest rate is certainly higher when someone puts down less than 25% on a non-primary resident. So my client is actually putting down 40%, which is absolutely limiting the difference between the primary and the non-primary interest rate because they're putting so much skin in the game. But they are going to pay the non-primary tax rate until they move here. Now, understand taxes are assessed based on occupancy January 1st of that year. Once my clients move here, they are going to fill out a homestead application form with the county. They're going to move over their driver's license to South Carolina. They're going to file their taxes. They're going to provide the county with a utility bill, file their taxes in the state of South Carolina. And with that, they're going to be able to get the lower tax rate. So remember what I said earlier in the video, if it was a $600,000 house, the annual tax is about $2,400. If it was a non-primary, it'd be about $6,000. So just recognize there is some money to be saved there, and just because it starts off as a second home does not mean that you're grandfathered into that higher tax rate forever. I have a lot of individuals who are they kind of see the market increasing or the home values appreciating, and they want to get in, they want to dip their toes in the sand, if you will, and understand where the marketplace is, and then one day make the transition here to the sunshine. Now here's the part of relocating that people absolutely love. Many times your financial picture actually improves. You can imagine over the course of the last couple of years, especially the last couple of years, our home values across the US have appreciated significantly. That means that somebody who is selling their property, potentially in the Northeast or the Midwest, is walking into a very nice pocket of change. And if they were to parlay that money into the down payment here, the equity position that they have is very strong. I'm going to give you an example of someone I just worked with yesterday. They are looking to not necessarily relocate from the Northeast to the South, they are relocating from one neighborhood to another. And what they're understanding is the HOA fee. So they're looking to move from a place called Riverton Point in Jasper County. Jasper County has slightly higher taxes than Beaufort County. So they're moving from Riverton Point to Callawassie Island. Now, they want their monthly mortgage payment to be all in $4,500 a month. That is principal and interest, taxes, insurance, and HOA. Callawassie, HOA is $1,755 per month. That's a real number that we need to take into consideration with your monthly payment. The insurance on the house that they're looking to buy, slightly more because it's an older house. The taxes though, like I said, it's going to be less because they're moving from Jasper County to Beaufort County. Their principal and interest payment is significantly less. Reason being, they're going to walk into about $200,000 worth of proceeds from the sale of their home. Therefore, the equity position that they are placing in the new home is so strong that they can achieve this $4,500 all-in monthly payment. I mean, for crying out loud, almost half of that payment is the HOA alone. So they are able to sell their house, put a large chunk of money down, walk away with the $4,500 all-in payment simply because their home has appreciated value. And again, I don't think that is just South Carolina to South Carolina. I think that is nationwide. If you bought your home a few years ago, back COVID or pre-COVID days, then you're probably sitting on a decent amount of equity, which puts you in a very nice position to have a lower monthly mortgage payment than you probably think. All right, now to the biggest mistakes that I see that people make. Number one, they think that, okay, if I have my home in the Northeast at $700,000, I'm going to buy the house in Bluffton for $500,000. They should roughly be the same because of taxes. Well, we've kind of already debunked that myth that depending on the occupancy piece, the taxes is only one part of the equation, right? If it's a non-primary, your taxes in South Carolina are probably almost in line with what you're paying in the Northeast. Now, also insurance. Homeowners insurance here is most likely a little bit higher. And then of course we factor in the HOA, which does not always exist in places in the Midwest and the Northeast, but very, very relevant here. That kind of feeds into the second surprise that people get hit with is the calculator. People will use these online generic calculators, and I can't stand them because the reality is Beaufort County especially has, not only do they have different taxes from primary versus non-primary, they also have different tax districts depending on where you are on Hilton Head, where you are in Bluffton. So even those little finite details, whether you're in the city limits of Bluffton versus in the non-incorporated area, that plays a role in your taxes. I feel like I'm saying the same thing over and over. Insurance plays such a role. I used to be able to have a typical plug number. I used to multiply the purchase price by 0.005 and I'd have an annual insurance figure. Those days are long gone. Proximity to water, age of the roof, age of the water heater, placement of the water heater, so many factors. Many times when people ask me for mortgage payments, I have to go and talk to an insurance agent so that I understand what the insurance will be, because I would literally be throwing a dartboard hoping that I hit the number. The good news is that most of the time I'm relatively accurate, but I will tell you, I take that extra step. I encourage you to take that extra step to be best friends with your insurance agent up front, because every property is slightly different in terms of cost. So the last expense that I see, or the last issue I see, is just not involving the local lender. I mean, I've talked to you through this whole video of, wow, there's HOA fees, there's transfer fees, there's difference in insurance, there's difference in taxes. There are so many different variables that I had someone yesterday, they asked me, hey, I see the HOA fee in homes.com says that it's going to be $414 a month. You said $464. That's correct. I did say $464 because it was a condo and it had $414 per month as a condo fee, and then it has an annual HOA fee of $600. So what I did was I did 600 divided by 12 and gave me 50. 414 plus 50 is $464. So I was correct, and you can see this individual went to homes.com, and though the 414 was pretty accurate because it did give the condo association fee, it only told kind of half the story, if you will. So enough of those stories start to go on and you realize, wow, I really should talk to a lender early, because if you fall in love with a property, but you get blindsided by some of these costs, this feel-good story kind of turns into a sad face. So don't let that happen to you. In summary, we've talked about taxes, insurance, down payments depending on occupancy, HOA fees, there could be some condo fees associated with that. Just a lot going on our area. So your mortgage payment, the big takeaway is your mortgage payment's going to look different. Could it be a good thing? Yes, it could be a good thing. Could there be some surprises? Yes. Are you able to get ahead of those surprises? Absolutely. My name's Aaron Benton. I'm a local mortgage lender. My office is right here in Hilton Head. I live in Bluffton, so I'm very well tuned with the area. I would love to understand your personal situation, crunch actual numbers for you. I never tell anyone, no, it's too early. Even if you are a year out from buying and you just want to dip your toes in the sand and understand what that monthly mortgage payment could look like so that you refine your search and you are looking at the right scenario, I would openly welcome that conversation. Tap the link below Schedule a Zoom call with me, give me a call, send me a text. I'd love to one day get to meet you, but if not, I'd at least like to see you on the next video.